Hello again, everyone. It's Vince Forer from TradingWinds.com, and this is our update for August 23rd, 2017. Let's take a quick look at today's markets. We did see more selling across the board. Stocks closing lower on average volume. The Dow down 87 points, and what we see here is an inside bar formation. I'm going to talk a bit more about that in just a moment. The S&P 500 was down 8.5. Also putting in an inside bar formation. The Nasdaq down 19, once again an inside bar formation, and the Russell was down about 1.5 today. So stocks closing lower. Bonds, however, moving nicely higher and taking out a previous high, which is important. They were up about 86 cents. That was TLT, that is, the ETF for the 20-year Treasury. Gold was up about 5 points or so. Crude had another nice day, up 1.2%. Now, let's talk about the inside bar formation. Let's go back to the chart of the Dow here. And let me get my trend line tool. What an inside bar formation is when you get a close, or I should say the range of the current bar, that is completely within the range of the previous bar. So have a look at this. Have yesterday's bar. Let's mark the high here of yesterday's bar. If we can, let me try that again. My mouse is giving me a little difficulty here. Let me just clean this up and try this again. There it is. So if we're going to mark the high and the low, you can see that today's bar was completely within that high and low. Now, if you get another day or multiple days within this range, then we're talking about a multi-day inside bar formation. And the longer this carries on, the bigger the significance that it carries. Eventually, this will break out either above the high or below the low. And what you're looking for is not a trade above or below those levels, but a close outside one of those levels. And that should indicate the next near-term direction of that underlying instrument. And the longer this goes on, the stronger the move tends to be once you get that breakout. So that's what we have with the three index charts. So that's one thing that we definitely want to keep an eye out in the days ahead. Now, if you're looking for a short trade candidate, look no further than IBM. And it has not set up yet, but it certainly looks like it will. As you can see here, for the most part of this year, it has been getting beaten up. And recently, over the past 3 trading sessions, it's experienced a nice bounce, but right into that downward sloping 20. It's run into support here, and as you can see today, as soon as it got above that line, it pulled back. Now, we do want to wait for some sort of reversal signal here, and we don't have it yet. But this is one to keep on your watch list, because any day now could happen. As early as tomorrow, we may see that reversal formation. It could come in the form of a bearish engulfing setup. It could come in the form of a shooting star, anything like that, or even just a close below a previous low here, and then we are off and running once again to the downside. So keep an eye on IBM, and we'll keep an eye on those inside bar formations on the index charts. But that's about it for now. Enjoy the rest of your day, and we'll see you on our next update.